Good evening, ladies and gentlemen. Michael Silva here. Today's October 9th. The time has come. We got inflation data coming out tomorrow, so it's important to look at what the market's pricing in as far as risk going into tomorrow's trading session and give you some insights to what the market has been doing. That's what we're going to do on today's Stock Market Brief show. Buckle up. Let's get into it. All right, people, welcome back. Let's take a look here at the 11 sectors that make up the S&P 500. Tech led the way. Utilities down there at the bottom. Utilities is typically a risk-off type environment. Tech is usually a risk-on. So today was a risk-on day as the S&P 500 finished up 71 basis points, printing a new all-time high. Let's take a look at the market conditions. We are currently above a rising 5-day in the SPY. The Qs, IWM, it's flattening out to rising. It actually looks like if it can hold here, we're putting in these higher lows, it could set up for a potential pop. We'll look at the daily time frame momentarily. Semiconductors holds a rising 5-day moving average. Biotech is up, and Dow Jones Industrial Average is coming back up here to a prior level of supply above that rising 5-day moving average there too as well. Let's take a look at the gamma levels. 5,800 is now that call wall. A lot of exposure there, but I should say 5,850 is growing in size. So going into tomorrow, this 5,850 may come into play if the market likes what it sees. If we take a look here at the gamma flip line, the gamma flip line is just at about 5705-ish, 5706. We're just going to call it 5700. It's going to update tomorrow. We'll see where it goes. But right now, this is the area where dealers look to buy the dip, sell the rip, and we're above the 5-day moving averages. Yes, it's a little extended, so we'll see how it plays out. But these are the conditions where you look to buy various setups and add exposure into the markets. We are, like I said, coming into a event that is going to be bringing in a lot of volatility, and it's important to know those levels that the market is pricing in. Now, before we get into that, let's take a look now at the daily time frames for the SPY, the Qs, and the IWM. So right now we're looking at some expected moves on the week. It was a $10 expected move. Last week we didn't tag it. This prior week, we didn't tag it. We talked more about this on a prior video, how these levels are typically tagged. Actually, 80% of the time this year, these weekly expected moves are tagged. Last year, 75% of the time, these weekly expected moves were tagged. And we have not tagged it now going on 3 weeks in a row. The last time that has happened was April of the prior year. And then the market exploded in a fury, up 10%, and then it reversed, going into a minor correction. Now, overall, we are still kind of in this breakout to all-time highs. The measured move from this little cup with handle would be right up to and around 620, and that's still a target if we can hold this swing low anchored volume weighted average price. After you can see we pulled into it and started seeing some support, prior resistance, held as support. So you'd want to hold this low at about 565. I'm going to round it there, 565. If we take a look at the Qs is still in a I'd say this is more of a compression pattern here still, but we did break out of this triangle, and you can see that we came up, try to fill this gap up. We came back down and tested this swing low anchored volume weighted average price, and from there we found a bounce, trying to get back up to fill that gap once again. Now, overall, the measured move of a bigger pattern here would bring us up to around 550 if you are looking for the upside match for that. Now, you'd want to, if you're managing risk, you'd want to make sure that we start to hold this swing low anchored volume weighted average price or this prior a little swing low here. As you can see, we have higher lows and they're getting a little bit tighter. So if price comes in and starts to move forward, awesome. You can update your stop as price continues to do so. Qs have still not met that all-time high. It's going to be important for the Qs to do that because tech is a sector that leads. Now, IWM on the daily time frame, this one is kind of just doodling around its prior swing low anchored volume weighted average price still. So I would like to see it break above the high of today. And, you know, if you take an early stab at this, you'd probably want to hold this swing low or even just today's daily low going into tomorrow. Sometimes, though, unfortunately, like if the market likes what it sees, this thing could just gap up and start the day, you know, significantly higher. We've seen that countless times with the IWM breaking out of tight contraction patterns like this one. But overall, if I zoom in, you know, you see the low, a higher low, and a higher low being built. You just want to see it prove itself. And like I said, on the 5-day moving average, it's starting to flatten out here. So if we can hold this, start moving back up, maybe break this little area here, and then we can have a stop here, stop there, whatever you see fit to play it for potentially a move in IWM to the upside. That would be the ideal thing from the bullish case. Right now I'm focusing more bullish looking elements, albeit that it's extended, but it's because positive gamma or above the flip line, and we're in an environment of a rising 5-day moving average. Now, like I said, we do have the inflation data coming out tomorrow, PPI the following day. This is an hour before the market opens up. This is what the market's pricing in as expected moves, $42 and some change there on the SPX. Now, to me, this does seem a little low given the context that this report, who knows if it's going to surprise or not surprise. So I wanted to look at the VIX and to see where the VIX was kind of closing at. And you can see that we're right at around 21 on the VIX, and we're actually in backwardation still. So what does this mean? It means that there's fear here or concern right now of more volatility in the here and now than there is in November and even so in December. So right now is where we could see some big moves. So it's going to be important to just look more than just the daily expected moves and weekly expected moves for tomorrow's trading session. So what I'm going to go ahead and do here is give you the implied move based off of a VIX calculation and give you those levels, and they're going to introduce you some zones of where we would finish within a one standard deviation move. So a one standard deviation move, right? 68% of the time we finish within that one standard deviation. But I like to remind people that in the S&P 500, it happens actually much more frequently than that. Typically, we're around 70 to 80% of the time with the S&P 500. It could be because it's a significantly more liquid product. Despite the fact, 68% of the time, that's technically the one standard deviation. What are our levels? Well, to the upside, where we'd probably start finding resistance would be 584.71 for the VIX higher expected level. The daily expected move is 581, and then we have our weekly expected move in here too at 583. So this zone in here will be the upside watch for tomorrow's trading session. As far as downside watch goes, we can be at the VIX lower implied move at 569.50 or the daily expected move 572.82. So this zone in here. Now, if the market comes in, you always want to see it show strength if you're looking to buy the dip. You don't just want to short into strength or buy into the buying into the dip. You want to, maybe go into a smaller intraday time frame and see how price responds and acts around that area. Or maybe even when the report comes out at 5:30 in the morning Pacific Standard Time, you can anchor a volume weighted average price to it. But what I was going to say is if price does come in here, that would still be in and around a rising 5-day moving average. It would be around the quarter to date anchored volume weighted average price and also the week to date. So there's a lot of supportive levels in confluence also with these expected moves here too. So that would be a key level. Now, if we start breaking, obviously the low, this prior low, the lower weekly expected move can obviously be in play from that point. Now, there are a couple of things that are, causing a little, not fear per se in the market, but a little bit of concern. And it might be the market front running something. I don't know, but the move in the dollar has been very aggressive. And I feel like the market's kind of ignoring that fact. Whereas typically there's a pretty strong negative correlation. Like the market, the dollar fell from, May basically down into October. And from that point, the S&P 500 rallied up. You can see multiple times where the dollar fell hard right here. S&P 500 rallied very, very strongly there in August. And now what we're seeing is the dollar really start to move here, and the S&P 500 hasn't even budged yet. So this could be actually a bullish thing, and it might be a bearish thing. It could be that the markets, this could be some sort of a flight to safety that the, currency market sees. And it might be warning us about the S&P 500. Or another way to look at this is if the dollar starts coming off like it has in the past, is that going to potentially help really start to crank this move in the S&P 500? I think we got to be open to that possibility, and also open to the possibility where gold, it came off as a little bit of a pullback. And if the dollar comes off, is that going to help propel gold to another high? So I think that those are two areas that we got to really kind of pay attention to. The 10-year yield is also another asset that has been on quite the rampage here. And this is also a little concerning because last year, like in 2022, 2023, when we had a rising yield and a rising dollar, it put pressure on the S&P 500. And also when we had a falling yield and a falling dollar, it really helped the S&P 500 go. Back to what I was saying, here in April, the 10-year yield fell into September. Okay, same with the dollar. April fell into September. Well, what was the S&P 500 doing then? Well, from April, after this little pullback here, boom, we started flying to new highs. So it's a very interesting aspect right now, and we have to really kind of see how this move, how it resolves itself. Will we find out this week? It's a possibility. We don't know. All we can know right now is that we're in positive gamma. We're above a rising 5-day moving average. All signs are green. And if that changes, then, well, we go from there. Now, a couple other interesting aspects about this rising yield is how oil actually has been falling. Okay, now oil has been coming off a little bit here. Could be due to what's going on in China and how also China reacted to. Could be geopolitical stuff abating. It could be a number of narratives, but what we do know is this. Oil has been a good leading indicator of the 10-year yield. Where oil fell, the 10-year yield follows shortly thereafter. You can see those candlesticks. That's the 10-year yield. Oil started rising, and then guess what? 10-year yield spiked up too. Oil started rising right here in the early September. Boom. And then oil a few days later, the 10-year yield a week later, boom, we started flying off too. So is oil giving us insight that the 10-year yield might start to be backing off here in a little bit, offering up an opportunity in potentially bonds? Now, this is interesting because I said the 10-year yield typically has a negative correlation with the markets, or it has been. But recently, actually, the S&P 500 and long-term yields have been having a positive correlation. So they rise up together. And you can see this green line, I believe, is the 10-day correlation. The blue line is the 30-day correlation. They're both above the zero line right here. So that means if long-term yields go up, the S&P 500 could go up with it. But you can see there's been a lot of times where it was a negative correlation too as well. So my thought here is, okay, if oil is signaling something here and the correlation is positive and the 10-year yield comes off here, well, does that mean the S&P 500 then comes down with it? Maybe, perhaps. So we got to just take that into consideration. You could see also here NDX, the NASDAQ 100, correlation to long-term yields. You can see the 30 and the 10-day correlations right here. They're both above the zero line. So this is also a positive correlation for the NASDAQ 100. If we take a look over here at the BP INFO, this is the bullish percent index for the technology sector. I'm not reading too much into this one, but I might as well just tell you that there is a small divergence taking place right here. You have matching highs to potentially a higher high here in the RSI. It's not a big divergence like it was in the past over here where you get extended up and then it comes in and then puts another high. Like, it was very clear, and there were, multiple week divergences. So we have just a small one right here that, hey, I mean, it'll be obvious in hindsight, but it can also expand back up, back into overbought. We can look for, a more prominent divergence when and if that takes place. The other one that I'd like to see was the Dow Jones Industrial Average. This one's pretty frothy here. It's the highest level reading that's been for a while. We do have a pretty clear divergence. As you can see, we've had multiple times where it's had a divergence. And, you might think, oh, what's the big deal here? Well, utilities was starting to get very extended too and show us a divergence and giving us a reading that we've never seen in the history of the chart. And once we started looking at that, well, utilities started backing off significantly from their highs, right? We had a day the other day where it was down like 2.5%. So there comes a time where you have to take a little bit of a breather, digest, see what the market wants to do after that, build a new base out, find some more buyers, and that's just how markets operate. Let's hop into Bitcoin. Bitcoin also sometimes can act as a leading, asset, which we've seen in the past. Not so much as recently. Bitcoin's been kind of flopping, jaloping around sideways. I want to just note that the 200-day, it's starting to round out here. We really need to recoup this and start turning back up if you want to be bullish. If this thing starts turning back down, it could represent a longer-term change in trend for the price of Bitcoin. Now, we did get a buy signal on Bitcoin about 2 weeks ago, but we got no official trigger. As you can see, we got the buy signal this week over here, and then we had to break a high above it this next week, the following week, and we did not do so. And we still managed to stay above the positive rate of change. So then we'd have to break a high of this week, and yet this week we did not do so, and it does not look right now like we will. So we'd have to, once this week closes, if we can hold in the positive rate of change area before getting a sell signal, then we just have to keep trailing it down and see if we break the high. But if we do get down a new sell signal, this buy signal would be a no trigger, and it would mean that we would still be on the original sell trigger from, a month or so ago, back over here, in the midst of all of this pretty much volatility. All right, everybody, that's all I got for you on today's episode. Be careful, be safe out there, focus on risk first. I will see you on the next episode. Toodaloo.